I'm delighted to welcome you all to our first public event of 2023. This evening's speaker, Alexis Antionadis, is an associate professor and director of international economics at Georgetown University in Qatar and senior advisor at the Qatari Ministry of Finance. Dr. Antionadis is an expert on global markets and a leading authority on the economies of the Gulf countries. At Georgetown's branch campus in Education City, he teaches courses on money and banking, international finance, and the global financial system. His current research is on exchange rates, big data, prices, and labor markets. During his 16 years in Qatar, Alexis has frequently advised the leadership of both public and private sector organizations. He is the recipient of a $1 million grant to undertake the first micro-study on the economies of the Gulf countries and another grant to conduct sentiment analysis in the Arab world using social media. Alexis earned his PhD in economics from Columbia University. Prior to that, he worked at the Federal Reserve Bank in New York. Alexis is a Fulbright Scholar and also is a recipient of the prestigious Neuhaus Fellowship, awarded to talented scholars for research on issues of globalization and governance. He spent the 2012-2013 academic year at Princeton University, where he became a member of the European Union program at the Woodrow Wilson School of Public and International Affairs. In his talk this evening on the global economy, he will share his views on inflation, monetary policy, and markets, and some of his findings from big data research on skills demand and the shifts taking place, as well as the implications this may have for countries like Jordan. Some of the questions he will address include, should we expect a recovery in 2023 or not? Could one leverage the power of big data to make sense of economic and market developments? And what are some of the key trends shaping up in global markets that we should be aware of? Without further ado, please join me in welcoming to the stage Mr. Alexis Antionadis. Thank you.
Hi, it's amazing to be here, to be at Columbia Center in Jordan, having finished Columbia and moved to Qatar. So American education is everywhere. I want to talk about the global economy. I want to share some insights with you, how I think about the global economy, and talk about big data, but then shift a little bit and discuss with you some changes I see taking place in labor markets that I actually think they have very big implications for a country like Qatar. And for everybody who's in business, everybody who has a kid and they're deciding on their education in the future. And I think these are new trends that we haven't really started to pay attention. So let me open my slides. All right, so I will start, as I said, with a briefing on global markets, but then the biggest part will be to talk about big data and skills demand, and I will conclude by trying to assess what it all means after I share a lot of information with you. And then we have the Q&A. All right, so to understand where the economy will be in 2023, I think it's important to understand what happened to the economy over the last year and a half, and what were the trends. And we all know that the markets went down, the economy slowed down because of rising prices. So I will start the discussion a little bit earlier. So if you look at the S&P 500, which is one of the indices that tracks the stock market, it's been rising from 2018 to 2021. Actually, it's been rising since 2010, after the Great Recession and the financial meltdown. So what happened after the financial meltdown? The Fed lowered interest rates, and that helped stimulate the economy. And since then, the markets have been going up. And what is interesting is that with COVID, in March of 2020, when airports shut down, panic took over, the market crashed, but only for a few days or a couple of weeks. And since then, it doubled. But there have been concerns in the economy, especially inflation, because we talk about economies closing, we talk about deglobalization or the resilience, we call it, of the supply chain. We talk about supply chain disruptions in China. Container shipments would cost $2,000-$3,000 to get things from China to the Middle East, and it went up to 16. So inflation was in our mind, but that wasn't the case of the Federal Reserve Bank. So I will share some comments made by the chair of the Federal Reserve. In August of 2025, in the Jackson Hole meeting, which is a meeting of central bankers, Powell laid down 5 reasons supporting his view why inflation is transitory. So his view was that, we have supply chain issues in the economy. It's not a big thing. It's transitory. No need to worry about it. It's just, Chinese workers getting sick. They have to stay in quarantine for a month. After a month, they will come back to work and everything will be fine. That was interesting because when you look at the producer price index at that time, you don't have to be an economist to realize something worrying is happening here. And this is a consumer price index at the same time. Now, what is the difference between the blue and the red? Red is the core CPI, so it doesn't include food and energy prices, which tend to be very volatile, which tend to be affected by COVID. But it's also urban. It's for people, for communities, in urban communities in the US. What's the difference? A bigger share of the spending is on rent and healthcare. And these are not transitory expenses. These have nothing to do with COVID. But the Fed missed it. There was another trend going on, and that had to do with the labor markets. And I will focus a lot of my second part on that. But something changed. People went home. They still had their paycheck. They were on Zoom. And they realized, it's nice being at home. I don't want to go back to work. It became very hard for companies globally to retain talent. They had to raise salaries to increase, and still they were struggling to hire people and then to retain them. And again, the Fed missed that. On October 22nd, again, the chair of the Federal Reserve System says that there's no sign of any so-called wage price spiral that can cause inflation to take off. I didn't believe that. I recall I was in Cyprus to give a talk, and I'm having dinner with a friend who has Trading.com and another global investment firm, and he was saying that globally it's been very hard for them to hire people in the financial sector in IT. These are companies that pay a lot of money, and that echoed the view I heard with, in discussions with other people in the business community across the globe. And we are having dinner at a kebab house that belonged to a friend, and the friend was there to serve us. He has a very famous lounge bar. And we said, why are you here? And he said, I cannot find anybody to hire. I'm like, this is more serious than we expected. So I went to mine data. At that time, I'll talk more about the data, but what I've been doing, I've been scraping, I've been downloading vacancies posted in China online, because if a company wants to hire, they post these vacancies on specific online boards. And this is public information, so with a little bit of coding, we can download that information, we can scrape it. So we scraped up to 500 million job posted online in China. But at that time, what I was doing, I wanted to study before and after COVID in China. This is the number of jobs posted every month. And then I realized on that site, I have the salary range. So I said, you know what, let me just compute what was the average salary offered every month during that time. I was shocked. This is China with a disruption. And the Fed was saying we don't see any problem with wages. It makes you wonder what type of data was the Fed looking at, because we are looking at public data. Then the employment cost index, of course, comes out a few days later. And again, it's shocking. After a week, Another statement by the Fed. Inflation expected to be transitory. Supply and demand imbalances related to the pandemic and the reopening of the economy have contributed to sizable price increases in some sectors. One thing was clear, the Fed really messed up. And they put their credibility on the line. So what they would have to do is not only fight inflation, but they would have to fight for their reputation and credibility. So at the end of the month, finally, the Fed said, we tend to use transitory to mean that it won't leave a permanent mark in the form of higher inflation. I think it's probably a good time to retire that word and try to explain more clearly what we mean. Finally, they realized things were more serious. So what happens at that point? The moment you hear that, for me it was clear from October and for many other people, but it means now the Fed will have to move sooner and start raising interest rates. For those non-economists among us, when you raise interest rates, basically you hit the brakes on the economy. And the economy slows down because that's the only way it's like when the car is overheating, you have to slow down. When the economy is overheating, prices go up. If it's driven from the demand, not the supply, and you hit the brakes by raising interest rates to slow down the economy. So that means the Fed would have to move faster to raise interest rates. It would have to raise interest rates more than people anticipated before. And it would go big on interest rates because not only does the Fed need to bring inflation down now, and it's always harder once you let inflation get beyond a certain point, but also because they need to build back their reputation and credibility. That's why in 2022 the Fed had a hawkish tone. So no surprise there. Oops, I'm going backwards. This is what happened after. This is the statement of the Fed, and the market went down. Now, what you see, interest rates didn't go up immediately. They went up in February, but you don't wait for interest rates to go up before you start selling. So my point is that, this shouldn't have been a surprise. Maybe it was a surprise why it took them so long, but there was no surprise. I think it's very important that we make this clear to people because if we want to think, is this over? We need to understand what contributed to the sell-off. Now, the economy in 2022, we have seen inflation peak in July of 2022, or June at 9.1%, the highest in 40 years, since 1982. During 2022, the Fed raised rates 7 times, 4 times very aggressively by 75 basis points. And of course, we had the devastating war in Ukraine at that time, who further exacerbated the supply chain issues. And of course, we've seen other markets like cryptos and Bitcoins collapse. This is an NFT. Actually, NFT is the title deed to this image. It's called the Bored Ape Yacht Club 3001. Anyway, in May of 2021, somebody bought this for $612. Sold it to Justin Bieber 6 months later for $1.3 million. I wish I had bought it in May. But then in November of the same year, it was worth only $70,000. This is how crazy markets have been. Okay, this is how I understand the market. So with this in mind, what should we expect in 2023? I think, I look at the oil prices. They have come down a bit because interest rates have gone up. I like to look some interesting series. So used car prices have gone through the roof. If you've been shopping for a car, you realize that it's not the time to buy a car now. But you've seen prices coming down a little bit. CPI and the employment cost index have stabilized. So are we in a turning point? Maybe. But I think we are not out of the woods yet. I think, and I see the Fed raising rates again, twice, for 75 basis points, because they really cannot risk messing up again this time. Then it will be very, very hard to contain inflation, and the consequences will be devastating. So they have to maintain a very hawkish tone. They have to say that we don't care about anything else besides inflation. If we need to crash the economy, we will do it, because they need to make it credible to fight inflation expectations. I think there will be a switch from value stocks to growth, to tech. I like technology because technology is not a sector by itself, but it's an input to every other part of the economy. Right now, we've seen the market in the tech prices collapse. If the market recovers, they will run much faster. But the first time we see restructuring in a very inefficient sector, because all these big tech companies have been flooded with money, with billions, hundreds of billions. They never had to cut spending. They kept hiring and hiring. So now finally they are going through a restructuring to make them more efficient. So you can buy them at a very low discount, more efficient than before, and with the potential to rise. So that's some of the things I see in 2023. That's the overview of the market. But let me go back to the data. Remember, I've been collecting this data on vacancies. Again, what are vacancies? A company will go online and they will put the company name, so you know the location of the company, you know the address, so you can link it with financial documents like balance sheet data, but you know the industry, and then there's a description, what type of person they look to hire. So let's do this. Let's explore the data a little bit further. So I will show you with the Chinese data, but I've been doing the same thing in the US. And so what we will do, we will read the text. It's only 500 million vacancies, so it will not take much time. We will read the text, and we will throw in another 500 million of US jobs and see what companies are looking for. I think that's fun. I mean, we finished the first part, so let's do that. And now I will look at the years 2014 and 2019 to take a 5-year difference to see the change in labor markets through the big data eyes, because I want to avoid the COVID years. And hopefully soon we will have data for 2022 and we will update it. Now, when we think about jobs, we have industries. Within industries, we have occupations. We can think of skills. So accountant is an occupation. Knowing how to use QuickBooks, that's a skill. And then you have certifications, CPA. So the first exercise in China, we read the text, it's in Chinese, right? So we had to do a little bit of analysis. And then we did a counting exercise. We passed 60 skills related to IT, like Word, Excel, Python, and so on. And we saw how many job posts mentioned that skill at least once. And then we said, in this 5-year period, what were the skills that experienced the highest drop in demand? And you get this list. I mean, I don't know what some of them are, but you see Adobe, database, most used software, like these very generic skills are no longer in demand. C programming, Windows, JavaScript, HTML, computer knowledge. So what's in demand? We can ask the same question. What are the skills that have grown the most? Python. Now, this distance look big, but this is 355%. So 4 times more jobs in 2019 in China requiring Python than in 2014. Natural language processing, machine learning, neural networks, data visualization, artificial intelligence, Tableau, data science, deep learning, TensorFlow, the biggest one. That's a huge increase in skills, very specific skills. Now, what is interesting, I don't show it here, but not only can I measure the growth in these skills, but we can see one more thing. So Python not only grew 4 times in 5-year period, but Python is needed across every industry, every occupation. So it's not QuickBooks just for accounting. All these things, with the exception of the last one, spread across occupations. So that tells me that the boundary between occupation is becoming obsolete. You get somebody that knows data analytics, because you could be in pharmaceuticals, you could be in banking, in real estate, in accounting, in agricultural. You need data science, you need Python, you need Tableau, you need artificial intelligence. It's changing the way we use the tools, and we use a higher share of these skills for what we want to produce. The other thing is, since I have wage, I can see what is the average salary for jobs that mention each skill. And it doesn't come as a surprise. Of course, you cannot read this, but at the bottom, I will read some names. At the very end, we have Word, spreadsheet, extract data, convert data, Outlook, Microsoft, computer knowledge, spreadsheet. That's at the low end. At the top, you have the usual suspect. Neural networks, TensorFlow, machine learning, supervised learning, data science, decision trees, Python, and so on. I think that shapes a very clear picture of a shift taking place. But this is specific to IT skills. What if we expand this a little bit more? So what if we create groups of skills? So we take artificial intelligence, machine learning, deep learning, and 20 other things into a machine learning group. Data analysis, data modeling, and we have data analytics group. And we have business group, writing, character, creativity, finance, cognitive ability, social ability, and so on. So we have groups of skills. And what if we study what was the increase in salary? You cannot interpret the number quite as a percentage, but think about it as a percentage for every group of skills. And what we see, there are some skills, they are big in demand. They grow at the fastest rate. The same skills are disruptive because they spread across all occupations and industries, and they attract the highest salary and the highest salary in growth. Okay, this is what we see from the data. And there is no uncertainty about that, and there is no uncertainty that this trend will only accelerate. So let's switch to the US, since we have the data and we have time. Now, in the US, we got the data from a company called Burning Glass Technology. So what they do, they read the text for us, and they break it into keywords. So they have what they call skills, 16,000 skills. And then they have qualifications, 3,000 qualifications. Okay, so let's do a counting exercise. Between 2014 and 2019, in the US, what were the skills that disappeared? And there are many of them, so I'm reporting the ones that had the highest number of mentions in 2014. In other words, what are some of the very important skills you had in 2014 that you no longer have? IBM Worklight, I don't know what these things are, but eBay Enterprise, how many of us use eBay these days, right? So it picks that up. Okay, what about the skills that grew the most? Now we can break them into 2 categories. One is a skill that existed in 2014, or totally new skills that didn't even exist in 2014. So here at the top, I have skills that existed in 2014, but grew at the highest. This is a percentage change, so it's a huge increase. Kubernetes, deep learning, blockchain, and Salesforce comes number 4 and 5. Salesforce is quite big. It will come up in many other things. But then TensorFlow comes at the top. There were 7,000 jobs in 2019 that required TensorFlow. We saw TensorFlow in China. the highest growth in the same period. And then you have Jupyter Notebook for Python. So an interesting pattern emerges. Now, I'm giving a talk, the keynote address to the CFA Society in Qatar next month. So I thought it would be fun to just go in the data I have in the US and see how the demand for CFAs changed. And they don't report MBA because MBA is not a qualification, it's a degree. So I said, okay, let me just do a counting exercise, but also I should be able to see in every post that mentions CFA, what are the skills they used to mention in 2014 and see if it changed. So before I do that, just how many skills, qualifications we have. We have 3,000. The most important in 2014 and 19 was driver's license. Some things don't change. I think if this was 2021 with COVID, you don't care about a driver's license. In 2021, the highest course on Coursera, which is an online platform, was, what was it? Something about trace methods, the one they did for COVID. But that's why I stopped in 20. Registered nurse, number 2, remains number 2. That's interesting. And then my favorite is first aid, number 3. Okay, what about, we have skills though that disappeared, so I know you cannot read them. So BSM, not skills, again, qualifications, certifications. BSM certified, certified shift supervisor, certified senior account manager, and then Oracle number 4 and 5. If you have Oracle shares, maybe you want to sell them. Now, existing skills, so what are some skills that experienced the highest growth, skills that existed in 2014? And you have Salesforce appearing in 1, 2, and 5. So Salesforce is quite big, and a few others. And when I look at new skills, again, you have Salesforce, but platform app builder, and so on. Okay, so let's look at CFA. 8,000 posts looking for CFAs in the US in 2014, 9,000 in 2019, but the total number of posts mentioning some sort of qualification increased 82%. So this is not a big increase in CFA. It's a negative increase, actually. But anyway, in 2014, the most important skills that are no longer required are telemarketing, Lotus application, Lotus Notes, salesmanship, lead follow-up. And it seems like a century ago. And the new skills, I'll read from both lists: machine learning, big data, computer engineering, Microsoft Power BI, data science, and so on. So if you are thinking of a CFA and what the companies are looking for, this is what you do. So I thought, let's look at CPA. And again, what was very important for CPA, Chartered Public Accounting, I think, was corporate law, high-level design, Upland, trust and estate law, and Model 204. And when you look at the new skills, you have artificial intelligence, Oracle Cloud, blockchain, and a few other skills. And if some of you are in construction or in project management, before in 2014, they were looking for the jobs that mentioned project management, PMP qualification. They would also mention these skills: TA, TDM, CA service virtualization, Lombard text messaging, Oracle, again, our favorite. Now, audit program development, model building, BIM, Instagram, that's an interesting one. Watson Hill, DevSecOps, Kubernetes, and so on. So we can see so many things from the data, right? And we can keep going and going and going, right? I don't know, what would be another qualification to check? I'll check after the talk. Investment banking. So I checked Series 7 and Series 6. Then demand for Series 6 went down, almost obsolete. Series 7 demand went down also. Pilates, 687 job posts requiring Pilates in 2014, a little bit over 3,000 in 2019. That's good news. My favorite, pinball diagnosis. 2 jobs in 2019. It's a yeah. Everything with Amazon Web Services, there are 20 different things, went through the roof. Alexa, 2,000% increase in jobs mentioning Alexa. What else? Plumbers, about 40,000 job posts in 2014 mentioning plumber, 140,000 in 2019. So when we think about skills, they're growing sort of at like 2 levels. So if Georgetown and Columbia doesn't work out, we know. So I teach a core course called International Finance that every student has to take. Well, now we changed it a little bit. And I would organize pre-COVID a barbecue outside. And I would bring the patties, and the students had to make it and flip their own burger. I would take photo of them, and I would say, show this to your parents. If things don't work out, you always have a real skill. But anyway, let's try to summarize what we have learned. There are new skills on the block. Demand for these skills is growing exponentially because these skills are disruptive. They are not only for a particular task or industry, but they cut across everything in the economy. They attract the highest wage. And I took the time to read some of the names because you don't recall any of these things being taught at uni. These are not taught in the classroom. But these are skills that typically you learn online through short courses. It's very easy to go online and very cheap and find those skills. So with this in mind, and this is where I want to talk about Jordan, because there's a big shift taking place in the labor force, and the shift is to skills-based hiring. Okay? There's a significant shortage of candidates that have these skills. And companies cannot find people with these skills. In surveys, we know that neither the students nor the employees believe that students leave schools with the right set of skills. And this is particularly in the case of the IT degree. And those skills relate to technology. So that's worrisome. And the value of college degree is diminishing. We were talking about inflation, now the value is diminishing. So what is the new trend now? In addition to skill-based hiring, we have some of the biggest companies that do no longer require a college degree. They don't want you to mention it in the application. They don't have it as a requirement. Google, Apple, IBM, GM, Tesla, Microsoft, even the state of Maryland, Lowe's, Home Depot, of course, also, they don't require that. So there's this change taking place. What does that mean? We really have to prioritize skill-based learning. We have to do it. We have to do it immediately. It's more relevant and focused. It tackles the shortfall from the transformation that is taking place in the labor force. It's cheaper. We don't have to build universities, hire instructors. All these things are online. It requires significantly less time, so you can learn Python in 2 months, but then it's up to you how you want to use it. And it's easier to implement. In what sense? If I want to teach you to be an economist, to do the kind of analysis I did in the beginning, maybe I need to have a university hire faculty. But to teach you these skills, I don't need any of that infrastructure. People can study remotely. and they can offer these skills remotely. So that's a game changer. Is this the solution the Middle East has been waiting for? We know that the challenge in the Middle East, or one of the main challenges, is that we have a very young population. 50% of the population are below the age of 20, and we know, and we mentioned this number, that if in the next few years we don't create 100 million jobs for the youth, then we will be in trouble. And of course we cannot create jobs. We know here in Jordan, unemployment rate for the youth and across the Middle East is very high, especially for women. There are many reasons behind it. Some of them could be lack of public transportation, or the norms of the family, or not having enough jobs for the educated women to take. But now we see a change. Let me explain this. If you were born in the US before, you had an advantage because you would go to a university. Whereas you're born in this part of the world, it's a problem of original sin. You don't have the same education, so if you want an economist and somebody is educated in the US, you give them the job. That no longer applies to those skills. You don't care if somebody has a degree from Harvard, if they are very good in data visualization, data mining, in Python, and so on. And actually, it's an advantage being in this part of the world because you are a cheaper hire. The person from Harvard who spent hundreds of thousands of dollars for their education, they cannot take a job just to do Python. So I think there is the change we've been waiting for. We have so many youth in the Middle East that need to get jobs. There are jobs they can offer remotely. It's very cheap to teach them those skills. And this is, I think, what we should be doing. A country like Jordan has a very big role to play. I mean, Qatar has been funding many initiatives like education above all, to educate children. Globally, they reach 12 million. They have Silatex to help the youth get jobs, but we need to give them skills. And I think Jordan should be a hub for skill-based training. And again, it can be done online. I think it's a no-brainer. Thank you.
We'll now be moving to the Q&A section. If anyone has a question, please raise your hand.
Thank you very much, Professor, for this very, very exciting lecture, or presentation, actually. My question is that you specifically talked about the developing new skills, or the need for new skills. However, the difference between 2014 and 2019 is only 5 years. In the age of previous work and previous skills, this was not enough. So, for instance, you would need an engineer for decades, not for a few years. How much or how long would you expect the new skills are going to be needed for, specifically in such a very quick changing world? Thank you.
Thank you. I think that's an excellent question. And you're right. Those skills are new skills. So if you compare them with the old skills, and duration, how long they will be here, will be very short. But they will evolve. They will not disappear to something new. If you start the youth with the old skill, I'm not against education. I'm the director of economics at Georgetown. So, but I'm saying if we cannot offer the education, even to my students, I tell them, learn Python, learn data analytics. When you apply for a job, they don't start from the top to say, oh, you graduated from Georgetown or Columbia or Princeton or wherever. They start from the bottom. Oh, you know Python, Power BI, come in, let's talk. And then, you get to talk about your education. Degree is very important. It teaches you a way of thinking, of tackling problems, but we also need skills. yes, the skills will be changing, but if you are not part of that, so if you don't work in a company where you use Python, and now there is a new library or a new language, it's very easy to make the transition, and it's very easy to add to that. The fact that they will have shorter durations is not a reason not to go in that path, especially when there is such a big problem right now with the youth.
Thank you for your insight. My question is, how reliable are the unemployment figure in this day and age? Since we have such a variety of subsection in the labor market, and is a deep recession a thing of the past, with the increase in productivity in all sectors?
Yes. I mean, we have a big problem with unemployment in this region. If it's not 28% for female unemployment in Jordan and it's 24 or 32, that's not the point. But the point you make is a good one in the following sense. Many of the youth is active in ways that we cannot measure that in official statistics. My son wants to be a YouTuber. The first thing I did with the data was to see how many companies exist for YouTubers. None. But he wants to be a YouTuber. And there are people making money. In the official statistics, they are unemployed, but they find other ways to make money. So, yes, we may have a problem with the statistics, but the reason why you have a problem is because these people are getting those skills. So I think it's very relevant. Now, going into a deep recession, I mean, we went through one in 2008, 2007, 2009 with the financial meltdown, and I don't see why we cannot go through a deep recession again. Maybe not a depression. We haven't seen one for 900 years, almost 95 years. But yeah, I mean, definitely I can see us going through a recession, a deep recession. I don't think what we went in 2022 is a recession, just a correction in the stock market. But I think there are fundamental problems in many economies. Take Europe. Europe has been so lucky with the climate this winter, except for a couple of weeks, at a time when they have a serious problem with energy needs, since they are affected by the war in Ukraine. But if you think about Europe, they had reserves from last year, from the summer, so they were going to pull off this year. The problem is next year, in 2014, when China opens again and they have a mandate to move away from coal energy and into LNG, what is Europe going to do? So I think we have serious problems, so I will not say we cannot have a deep recession because we learn how to manage.
Then why the European equity market are at all-time high? Is that because they are becoming so focused on short-term, gains and profit?
Yeah. I think a big part of it is the weak euro that helped investors quickly move money into Europe to play the FX. So you put money in the stock market. 3 months ago, the euro with the dollar was at 1 or 0.95, and now it's 1.07. So I think part of the reason why markets have gone up in Europe is because of the adjustment in the FX. It was really a good time to put money there. Not in every company, though. You don't take big risks, but in value stocks, you take advantage of the FX.
Sorry. I had a question regarding the labor market for the region and for Jordan specifically. The unemployment rate here in Jordan is 22-23%. For young people under the age of 25, it's closer to 50%. And that's the official statistics. At the same time, you have these skills that can be learned and monetized very quickly, and you have a huge demand globally. It seems like with this much unemployment and like this much demand for this kind of work, it seems like the market would solve itself. So what are the challenges, what are the barriers that are keeping young people from instantly getting into these jobs? Is it English language skills? Is it like the most basic digital literacy? What are the things that are kind of keeping people from jumping immediately into these things?
That's very good. I don't think they have a good understanding of this picture. Right? They don't have the skill. I know there are many companies in Cyprus. I come from Cyprus. And a lot of headquarters moved there now, a lot of gaming companies, a lot of FX. Everybody has high need of people with this type of skills. I will not call them IT because IT is more about with this type of skills. They cannot find them. And you know what? They will not source from the US, but they would love to source from this part of the world or even have people work remotely. Cyprus is 1 hour flight away. They can meet, on Fridays and have these meetings. But did we mentor the youth here on the opportunities? Did we create a center where they can come in and they have the computers and they can take courses with Coursera? Have we teamed up with those companies? I'm giving the example of Cyprus to create a curriculum with Coursera and offer it to the youth here and give incentives to the youth to take those courses. It's not a language issue. I know this gaming company, they work with a couple of universities in Athens, in Cyprus, in Nicosia, and they build skill-based curricula, and they have their own people teaching for free, so many students and non-students take those courses, and then the company picks the best and gives them a job. It's very easy to do that. Actually, I told the founder, he's a friend of mine, I said, come on, let's go together in Jordan and set up one there. There are so many people who would benefit from those skills. So it's not that they have the skills and still they don't have the opportunity. Even if you have the skills, you need the network, right? But if we create it the right way, so you offer the skills and the network and the mentoring and the advising, I think you can see a lot of progress. It's a much simpler problem than trying to set up universities. We have in the front.
So, my question has been partially answered in this last comment that you made. But, education in the region is highly centralized, and there's very strongly held views about what education should be about. Socially, people like to go to university and have 4-year degrees, even though there's still a lot of unemployment coming out of those college graduates. But have you seen any strategies, for example, in the Gulf, of redirecting people from that 4-year degree, you don't really need that degree, towards something more practical along the lines of what you're talking about? Because you're also having to fly against really a strongly held view that you need to be an engineer, you need to have a 4-year degree. What kind of practical strategies can a government do? Is government even aware of these conclusions? Not here, but in general, across the world.
Yes. Thanks. Let me be clear. I'm not advocating abolishing education. Then I will be unemployed. No, but actually, what I am saying is, I come from a family where none of my parents finished high school. They couldn't afford it. But then I have a twin brother, and both of us have a PhD from Columbia, right? Because it was a dream of our father to study in the US. I don't know how financially we couldn't do it, but and we try to pass the same idea to our kids, right? But you can combine that. There are two ways. You have people getting these degrees, but then 50% of them remain unemployed. So they also have plenty of time if we offer them this in parallel, because then the next step, which is to engage with the Ministry of Education and try to improve or restructure a little bit education to start offering some of those skills, that may take a little bit more time. The Ministry of Education in Morocco has teamed up with Coursera to improve how they administer these skills to the youth. I think it can be done. But then you have to get the Ministry of Education involved. So what I am saying is, you need education, but you can do it in parallel until you have those discussions. Those take a little bit more time, but it can be done in parallel. It's not a choice whether you do one or the other. It's very cost effective to offer these online courses. In 3 days, I'm getting an executive degree in advanced data science from MIT. It cost me $3,900. This is unprecedented because they give it to the masses. The courses on Coursera, they're so cheap. So we can do this. Again, we don't have to pick one or the other. We need to maintain our universities and we need to improve them. We need to explain to the youth that when you go to class, pay attention. What you learn there, it's something you will carry with you for the rest of your life. When they finish and they don't get a job, how are they going to pay attention when you teach them something in class? How are they going to respect you? But if we can find a balance by giving them also skills on top of the education, then we have the best ingredient.
Thank you so much, Professor, for that talk. That was very interesting. And if you allow me, I wanted to ask you a question about the beginning of the presentation. So I was studying economics in the US during COVID, and I was taking monetary economics classes. And in class, we were following the Federal Reserve. We were trying to understand where their decisions were coming from and what they were saying and why they were saying it. And the reality of the situation is that they had changed their framework in August of 2020 to redefine what maximum employment meant and how they were measuring inflation, that made them commit to not acting on inflation unless it was absolutely necessary to, and it was very alarming. And for them, given the US data and their analysis, they found that inflation was only in specific goods that were directly impacted by COVID. Wages actually were not, wage increases weren't alarming, and to them, alarming wage increases means if wages are increasing faster than productivity is. And that wasn't the case at the time when they said it was transitory. That wasn't the case, and long-term inflation expectations were anchored, and to them, given the framework, it made sense to allow inflation to go a little bit higher, to allow the economy to run a little bit hotter for gains in the labor market, because that was their mandate and that was the framework, the way they defined it at the beginning of during the beginning of COVID. Now, this wasn't the case around the world. As you mentioned, China, Cyprus, in Jordan, this wasn't the case, but for them it was. And so a question that continuously popped up during class is it, and I'm genuinely interested to hear your opinion on this. Is it the US and the Federal Reserve's role or responsibility to understand the global economy and what's happening worldwide given the world's dependency on the US and the dollar before they make policy decisions? Or is it entirely fair for them to say, this is our inflation, this is our labor market, this is our framework, this is what we want to do for the US, and then whatever happens with the world, that's on them?
Thank you. They should only care about the US. I was an assistant economist at the Fed. It's the Federal Reserve Bank of the US. They should care about the US. You are driving a car and I chose to drive my skateboard and hold on your car. You shouldn't decide where you go. It was my choice to hold the car and go wherever you are going. They have to do monetary policy. They have a dual mandate, as you rightly said, which is unemployment and price stability. And this is the only thing they should be looking at. It's true, and I was in Qatar in 2008 when in the fourth quarter of 2008, inflation in Qatar was 14.1%. The financial meltdown happens in the US, and US slashes interest rates to zero, basically. And then Qatar had to follow when they had 14.1% inflation, when they want to do the opposite. But it's not the role of the Fed to say, Qatar will suffer, emerging markets who peg their currency to the dollar, now they will not be able to maintain that currency peg, and the currency will collapse, and you will have, what you have in Lebanon and in Egypt. No, that's not the role of the Federal Reserve Bank. Absolutely not. And it's not that, they don't care. It's just not their mandate, right? It's not their role.
Thank you very much. I want to follow up on the gentleman's question there. I think he makes a very good observation. The US has a very tight job market, growth less than 3%. Anybody with some computer skills can find a job. And we have 50% unemployment rate in Jordan. Many of them, not all, quite a bit are actually not skilled even after college, but many of them are very skilled. Work is moving online. Why hasn't the market forces worked to employ Jordanians in Amman or in Jordan working online for US firms? Because we're a small country, all of our 50% unemployed are per less than 200,000. So why isn't the market forces not working? What's the mismatch?
I wish I had the answer. I don't know much about the economy in Jordan, but clearly we have a mechanism failure. You see in the Philippines, US companies realized that people in the Philippines speak English very well, and they moved all their call centers in the Philippines. And then they realized, well, we can actually move more and more operations in the Philippines. So why haven't they done the same thing with Jordan? Why is it that companies in Cyprus are struggling to hire? The rents in my city, in Limassol, have gone through the roof. And that's after all the Russians came in the 90s and the rents went up. Because of the demand for those skills, companies will pay rent, the same type of rent allowance I would be getting in Qatar. They will pay private schooling. That's unheard of in Cyprus. For those skills, Jordan is 1 hour flight away. So I don't know, but to me, definitely that's a direction that somebody has to work on two fronts. One is how to increase the availability of those skills for students to study, maybe some foundation, maybe in collaboration with Columbia, maybe, it doesn't matter who does it, but it needs to happen, but also engage the Ministry of Education to reform third-tier education, but also some networking events. Like you have the investment promotion agencies in every country. Why don't you have a labor promotion agency? That seems to me the case that would benefit a lot this country. But if companies don't know, and it's much harder to get a company to set up headquarters here. You need other reasons. You need tax benefits. They need a lot of other things. They need to know you, and I have the Cyprus ambassador, so I have to be careful. I was going to say you have to give them passports, EU passport. But no, that's not the case. But I don't know, but something needs to happen. But we can start with, without getting them here, even offer a subsidy if you hire people from Jordan to work remotely.
Thank you, Professor. Can you give us just your thoughts for the next 2 to 3 years about your prediction for the regional economies? Different economies have dealt with coming out of the pandemic differently. Saudi is booming, Egypt is suffering. Just your general thoughts about the region.
Okay. That's a tough one. I can talk about, Saudi will be booming. At least for the next 2 or 3 years. I think the dollar will start depreciating, and it will be a one-way street because the Fed will continue, I think, to raise interest rates, but in 2024 they will start lowering interest rates. At that point, especially if Europe stabilizes, I think you will start seeing the dollar declining, and I don't know where that decline will stop. So going back to the question about how is that going to affect the countries that are pegged to the dollar, we'll have more concerns about importing inflation. A weak dollar means that everything we buy from outside is more expensive. So that's what I see. Now, I cannot say about Egypt. I don't follow the economy of Egypt. And Europe, it really depends on the outcome of the war, I think. It's very hard to make predictions.
Hi, thank you for your talk. I really enjoyed it. I am also wondering more of a macroeconomic question. When we see the Fed start to increase interest rates and the CPI and the consumer price index only stabilize rather than start to lower again, what do you think the chances are that the Fed continues to go a little too tight and maybe push into recession territory? And then could you talk a little bit about the potential for dollar depreciation and that effect on the region for the countries that have currency pegs to the US dollar?
Okay, so I did talk a little bit about the FX. I'll talk more about that. So it's interesting, in the labor markets, the challenge was for companies to get people to come and work for them. I think this is changing in the US because you are on your couch, laying on your couch, refusing to go and work as long as you have money. And with COVID, all of us stayed home. We still had our salary. We learned how to bake. And who wanted to go and work? But now the cost of living has gone up and the savings have gone down. So I think there is a change in pattern. More and more people are pushed back into the workforce. So I think on the wage front, I think we will see declines. On the CPI, it's very hard to bring down healthcare costs. Travel costs have gone through the roof. It's very hard to bring those down. But final good prices, they will have to come down, and that will hurt the earnings of companies. So yeah, I think we will go into a recession. I think the Fed will have to raise rates, because if they get it wrong, then it will be devastating for the economy. It's better to suffer for 6 months, and then you know how to fix it. You lower rates. But if you miss it and inflation starts going up again, then you have to go in and raise rates even more, and that will take more time, and then the markets will have their doubts, and then we don't know how things will unravel. So we cannot risk that. On the FX, yes, think of it, this cycle of tightening, the dollar is getting stronger, and once they start lowering interest rates, or when the markets believe that the Fed is done with raising interest rates, then you will see the dollar declining. Now, the last part, sorry, I forgot to say, and what it means, yes, it means we import inflation. So in 2008, the dollar was at $1.16 to the euro. So you would hear calls from this part of the world to move away from the dollar peg. And I was in Qatar then, and you would hear these calls from people from the central bank. I remember in one panel, a person from the central bank said, I had this dream last night that I woke up and there was no longer the currency peg. And that was the silliest thing to say. If you're from the central bank, first get your act together to know what it means to manage a floating currency, which means you need to have strong research capabilities, you need to be able to monitor the economy, to have data that you don't have. And if you want to move away from the dollar, what you want to say is there's no way you're moving away. So the dollar is strong when you move away, but when all your reserves are in dollar, you don't say, I wish I could move away. And on the importing inflation, I asked them, how much inflation do we import? Nobody knew. So what I did, I work a lot with big data. So the same way I've been scraping price vacancies, I'm scraping prices from Carrefour, from all the grocery stores in all the Gulf countries. So then I sent people with handheld devices in a big Carrefour store in UAE, and I got the country of origin. So I was able to track how the prices of things coming from Europe were changing as the dollar was depreciating. It's called pass-through. And pass-through is only 20%, which means that if the dollar depreciates 10%, prices will go up 2%, which is bad, but it's not alarming. You don't decide to move away from the dollar based on that only.
So I have two questions. The first one is, I'm very curious about it, is what was the impact, like the afterward impact, the World Cup, as a resident of Qatar, what was the afterward impact the World Cup had on Qatar, on the region, and on the world? That's my first question.
You want to ask the second one? Yeah, because I will need a week to answer.
Okay, so the second one is, here in Jordan, I sat with two gentlemen that were involved in doing the new builds for the kingdom. And my question for them was, why don't we print a 100 JD bill? And both of them had their answer that when you have a weak currency, you can't, when you have a weak currency, you print higher bills. And from what I've studied, I think isn't the opposite, that the stronger the economy gets, the higher the bills go? Thank you very much.
All right, thanks. Let me answer the first one. I'm not sure I can contribute anything on the second one because it's theoretical. I don't know the situation with the currency, but when your currency is pegged, you just cannot print money. On the World Cup, it's a very big question, but definitely Qatar did it as a way to promote the Middle East. It's also a branding story to show the world Qatar, but also the Middle East. I think there is a change taking place. We have UAE stayed open during COVID, the only country that was open during COVID. Many people decided to come for their holiday and they saw something they didn't expect, but maybe Dubai, they know what it is. Then you had the World Cup in Qatar that got very bad press in Western media, really bad press coverage, but the people that came realized that the press coverage had nothing to do with reality. So I think it's a positive story, and we see, so it was branding. I think the impact to the region and to Qatar is it portrays a very positive image of the Middle East, which is what we need to be able to attract companies to come here, to hire Jordanians, and we see the growth taking place in Saudi. That will hopefully bring more investment and create more jobs, and these jobs will not be filled by people in Europe and the US, they will be filled hopefully from this region. I have to keep my answer very short. Your Excellency?
Unfortunately, this will be the last question in the interest of time, but everyone is welcome to join us in the courtyard after for a light reception and to continue the discussion. Thank you.
I will be very brief. Dr. Andoniadis, welcome to Jordan. Thank you very much for this presentation. I was impressed, to be honest, and at the same time, I felt a bit old-fashioned with all this new information for me. And maybe my question might sound old-fashioned as well. So I would like to ask you, which was the impact of the pandemic on this shift in the professions, demand, and the skills, and also your assessment about the future role of China in this area. Thank you.
Thank you, Mr. Ambassador. So I'm showing you the change in skills between 14 and 19, but we've done the exercise. Initially, we had data for this period right before COVID, 6 months before. 6 months with the onset of COVID, then they had a program in China to encourage Chinese companies to hire locals that was phased out in August. So we compared the 6 months after with the 6 months before. It's the same story. The same sort of skills are growing very fast. So that doesn't change. What it tells us about China's role, we are trying to assess that. And what do I mean by that? So what we are trying to do now is link multinationals that operate in the US, in India, and China, and try to trace their hiring practices and see what skills they hire across the board. And this is important because if you hire Python data visualization in US, but you hire lower skills in China for your operation, it's one thing. But if you hire AI machine learning in China and plumbers in the US, that's a different story. And this is what, one of the things we are trying to do right now. So, I mean, taking the discussion away from the skills, or the lesson we get even from this preliminary is China is growing. The demand for these skills is growing a lot in China. It doesn't look to be different than the US. Maybe it's more advanced in China than it is in the US. But maybe we can discuss that later. Well, thank you, everyone.